All right, perfect.
We're not in order, by the way. It's all good.
So today we're pleased to announce our panelists. We have Dan Corcoran, who's founder and CEO of Volos. Russ D'Argento, founder and CEO of FINTRX. Vasilios, Roussos, DC Fintech Innovation Center, and Enrico Palmerino, founder and CEO of Botkeeper. Thank you all for being here. We're really pleased to be able to hear.
Thank you. Thanks for having us.
So I think our first questions, we kind of want to focus on getting started in fintech, kind of from a student's perspective, like how you would start from no experience in the fintech industry as well as where the fintech industry is kind of trending as a whole. So our first question is, our first question is, what do you see being the biggest challenge in the future for the fintech integration? Then we can kind of start at the end here with Dan.
Sure. Well, nice to meet everyone. Thanks for coming out, and yeah, it'd be great to get a kind of a sense of this audience as well. Obviously, it's a relatively small group, so happy to have it interactive, and just for way of background, the company I own, Volos, is a company that's in the benchmark index space. So think about like Dow Jones indexes, but what we do is we calculate financial indexes for options and derivatives. So, for example, if you're using a stock option to protect a position that you have in a stock, we would tell you a benchmark that is the combination of that options position that you could go track, as an investor with your capital. And so I started the business in 2014, and really think that it's an interesting first question you asked to kick it off, and I'll turn it over and let the other panelists introduce themselves. But the question was, what do you see as the challenges for integration? And quite frankly, I really think that it has to realistically do with custodian banks, but I'd say it's not really a technical problem at this point. It's pretty straightforward what the financial data is that's out there that pertains to people and firms' capital for the most part. And there are some complexities when it comes to big companies and their accounting and things like that. From like a data and integrations of software point of view, I'd say that problem is maybe not as big of a problem from a technical standpoint. I'd say there are different business challenges, getting different firms to work with each other and do business and transfer the data and sell it and buy it. So that's where different software companies can come into the market and help facilitate more financial transactions. So I'd say that the challenges with integrations are getting businesses to work with each other in ways that are economical, and technology is helping that happen. But from an engineering standpoint, I would say that is, with the exception of basically security for these financial transactions, for integration, I'd say it's largely a problem it's not really that relevant like it was maybe 20 years ago when the internet was coming up.
Also, feel free to introduce yourself, and thanks, Dan. Yeah, feel free to introduce yourself and your company first, and then the question after.
Yeah, we'll do a quick intro.
Yeah, that sounds great.
My name is Russ D'Argento. I'm founder and CEO of FINTRX, and we are a data and tech platform for the alternative investment. So we provide family office data, registered investment advisor, and broker-dealer data to the market that allows them to really humanize their outreach, really wrap their arms around what is a very fragmented space. It's a time savings play, but it also does a lot with taking technology and algorithms and saying, what does the market look like? How can I map it? Where's my best path to make introductions for me, or who do I share passions and interests outside of work so I can start better conversations and better dialogue, which is really valuable and important when you're talking about investments and raising money. Quickly, in terms of background of the business, founded the business from a particular pain point that I was having, raising money in the hedge fund space. So I was tasked with going into the private wealth sector of the market. Not to get too far into the weeds, but if a hedge fund or a private equity firm, et cetera, is raising capital, they usually do it from two cohorts. One is an institutional investor, which would be a college endowment or a pension plan or something like this. And the other cohort is private wealth. So that is either an ultra high net worth individual or multiple high net worth individuals in a multifamily office, or like a registered investment advisor, which might have 100 individuals or families that are controlling that capital. So I was calling into the latter, and it just became very apparent to me quickly that there was really a gap in what's available in terms of resources to access that information. And then secondly, the tech and the platform, the UI, the UX was really, really important. And so for me, it was like I'm just one small fish in a huge sea. I'm a very important player in that space, and I was struggling day after day after day. And so that is kind of what led me to go out and create this business in 2014, and really kind of got off the ground in 2017. Inspired.
Vasilios, Roussos, I'm the Managing Director of the CEO of FINTRX Innovation Center. As a nonprofit, mission-focused FinTech Accelerator. And so what we do is we help startups who are in initial production, but generally earlier, so post code development, but they're still working on market fit and opportunity. And so we invite them into our program for 1 year at the physical space downtown. We give them a lot of programming and education and networking and support to be able to overcome this very, very hard problem of finding product fit. And then hopefully once they do that, they're sort of well positioned to go out into the broader world and take advantage of resources like venture capital and otherwise and get supported and grow beyond that. We've had probably close to 100 startups come through the space, many of which are Boston's leading next-gen startups, a couple $1 billion in value generated over the last 4 or 5 years from those startups. My background is in VC, in enterprise product, and an entrepreneur. So started and sold a company. The reason why I'm doing what I do is because of my prior experiences. I just realized that there's so much to learn and so much that you need to be aware of, and so much support that's required to be able to build a successful company. And in entrepreneurship, and founders have a real soft spot in my heart because they're betting their entire lives and well-beings on their dreams. And so for me, it's the opportunity to help people build their dreams. And I could add my kind of background to support that. And so, you know, these guys, you know, very delighted to be on the panel with them and kind of talk shop here. But let me know what you guys are most interested in. And I'm happy to talk about that.
Hey everyone, Enrico Palmerino, founder and CEO of Botkeeper. Botkeeper provides an automated bookkeeping platform for accounting firms. So if you're an accounting firm and you're offering bookkeeping through CFO suite services to your clients, more and more these days you may be running and performing that service using my platform. Our platform allows an accountant to do the work of 2 or 3. It automates a lot of the core processing, categorization, classification, reconciliation, bill pay, journal entries, all the things that take a lot of time but don't require a lot of thought. And that frees up the skilled accountant to be doing more complicated, thought-provoking, you know, anything that gives them real meaning in life and challenges them, you know, the critical, complicated accounting tasks. So the AI does, you know, what I like to call the Iron Man suit to an accountant, giving them superhuman-like powers, allowing them to, you know, kind of leverage what they're really good at. I got into accounting through business ventures I had started prior. So we launched Botkeeper in 2016. We've raised 90 million to date over the last 4 years. We support about 300 firms. Prior to that, I was in cloud accounting. So effectively, the people who were buying my software, I was one of them, and supporting a bunch of SMBs on doing their bookkeeping through CFO Stack and doing it in a cloud format, you know, digitizing all the data, integrating all the workflows. I got into that because I started a company in college that automated lighting analysis and design. So whether it's the Prudential Center, IKEA, Kodak, AT&T, Coca-Cola, Boeing, all those guys use my lights and lighting product and lighting software. We kind of do a lot of cool things in LED. We grew really fast in my while I was in school. So dorm room to senior year, we went from 0 to 60 employees, 8.5 million revenue, got acquired. So I had a nice exit early on. And that, the biggest challenge I had when running that business was how to run and scale that accounting practice within the business. And that got me into accounting, which eventually got me into building Botkeeper to make accountants more efficient, because that was my biggest challenge with that accounting practice.
Sweet. So then starting with Russ, do you want to start back and circle back to what do you see being the biggest challenge in the future for fintech integration?
Integration into
Just integration into like current technologies, current practices, current like the financial industry. How is fintech? How do you see any challenge with fintech like integrating that and working with that in the future?
candidly, I think we're pretty far along in that process. I mean, it's certainly iterative and it will continue to grow. I think for us, where we see kind of the biggest integration problems are just kind of people that have been around in the investment business for a long time, and they're stuck in their ways of how they go about doing things, and they're on notebooks and things like this. They're not really open to finding a better way, a more efficient way. I know our client success team will run into that from time to time. So from an integration standpoint, I think that is where the hurdles are. But obviously, every year that goes by, that hurdle becomes less and less. But I do think we are fairly far along in the process. I don't think we're that or where it's like completely basic and people are have their hands on it, software to.
So I think everything that these guys said is exactly right. And so if you're thinking about it from a startup perspective and the integration, and if you're today's world is across all things is larger and more interconnected, right? And APIs is the easy thread that enables that and makes it possible. Since we're here to talk about fintech, I'm sure you guys probably had Plaid, and you know what Plaid is, and when you hook up new bank accounts. And so there are integrators like Plaid. There are folks who provide integration services and other services like banking as a service, Synaptify, and a whole lot of others, which are basically providing the backend infrastructure to allow fintechs to have integrations, deploy integrations right off the bat, a lot easier and a lot cheaper and a lot more scalable. And so I think that there's going to be an enormous wave of integration coming, which is probably the gist behind this question. However, if you think about the entire ecosystem for incumbent institutions, banks, asset managers, et cetera, their core systems and core infrastructure, the basics of that are literally 30, 40 years old. And so they were built in a time before APIs and interconnections. And the main technology that runs a bank is called a core. Basically, there's 4 cores. 3 out of those 4 kind of dominate the market. So it's effectively an oligopoly of financial services providers that have control over the 11,000 banks and credit unions. From a business perspective, they do not want to open, right? They've got a big pile of cash and a kingdom, right? What do you do when you have a kingdom? You build moats and high walls. And that's exactly what they've done, right? And so, while APIs may be there, right? Having access to those APIs are inaccessible, right? And so the world is basically trying to penetrate those and work around them as much as possible. And that sort of struggle, that friction between the fintech, the incumbents, and even the existing institutions is what's happening right now. And so when you look at your sort of traditional bank and you say, why doesn't it have all the features of, PayPal or Venmo or X, Y, and Z? In large parts because of that. And also because the incumbents have built an entire IT infrastructure, entire compliance and risk infrastructure that's based on managing the kind of tech stack of the past. And so what do I mean by that? Tech stack of the past is fewer vendors is better than more vendors, right? That reduces compliance and risk to the organization and vendor risk to the organization. A simpler tech stack because of fewer vendors and working with more of their products is easier from a technology deployment perspective than certainly new startups. And so the world is changing from a kind of internal structure to this kind of like exoplanets of fintechs all the way around. And organizations have not really become very good at making that shift yet, right? Because it's hard to be good at with two things at once. And as a result, you're seeing the success of Plaid. You're seeing the success of startups who are tacking things on. And I think that, we probably have a good 10 years before there's a major shift in skill set, tech stack, openness across the industry. And when that happens, then you've got larger access to data. We haven't talked about AI yet, but we were having kind of a panelist conversation before the start of the event today, where we were talking about AI and data and what these guys are doing. And so there's some really super cool evidence of the value of AI, but that can only happen if innovative startups have the access to that core information. And like I said, there's still this battle going on.
I couldn't agree with Vasilios more. The biggest challenge to data integration is the bank. Banks don't want you to have access to the data. I believe that it's your data and that you should be able to make it publicly available to whoever you want. And that fight's going to continue so long as that data gives the bank some level of an advantage, security, the opportunity to build their own applications or financial products. So for instance, Botkeeper is part of a consortium called FTX. It's the Financial Data Exchange, basically lobbies against banking at large, trying to make your data publicly available to who and however you want it to be. But that is the biggest challenge. So while Plaid does connect to a number of banks, those connections constantly break because banks constantly push new updates or security updates or revise the access to statements or check images or other data that they have. So the APIs exist. It's just whether or not they're going to render the data out that you're looking to get is really the question. And we see this all the time because right now we build on top of Finicity and MX and soon to be Plaid in addition to try to become the intelligent layer where you route the connection down. But I don't see this problem going away so long as, if it goes away, you've restricted the power of the bank and the bank's ability to monetize that data. So it's not in their interest to make it publicly available. But I do see that interest eventually changing by force because you're seeing more of these bank as a service providers come out there, like Chime isn't a bank, it's just a giant marketing service on top of another bank. And if you get a few out there that are starting to make banking products and the data more accessible, you're going to have the market push the SMB, the client, into the bucket or bank that they want you to be in order to use the service that they want you to use. And as banking relationships get more and more decentralized, you think about it these days, used to be your bank down the street knew you as a person, knew your family, maybe went to like some of the same groups as you and therefore was willing to lend or bank you on that relationship. That is becoming more of a data-oriented relationship and less personal. And as that personalization diminishes, it is becoming more personal in terms of data points, but in a more cold structure, it's purely based on the data. That is going to allow other banks to basically start to emerge and be pushing their clients into banking products that the SMB is more willing to use because there is no real benefit from a loan or financial standpoint that you get from your credit union across the street versus this truly digital banking product and checking account that you can get through one of the new neobanks that's emerged. So I think that's going to be the biggest challenge. I'd agree. It's a decade-long battle that's going to be fought. And I think what will end up happening is a new class of banks will begin to rise up. You're already seeing Ant Financial, who has more, they have, I think it's like 30 times the number of clients on Ant Financial with a 10th of the staff. So they're operating, then Bank of America, I think, or Wells Fargo. So they're operating at crazy levels of efficiency, entirely data-driven, much more open access to products. And that bank emerged in how long has Ant Financial been around? Decade.
Yeah.
Okay. Maybe a decade long. When you think about the other banks have been here for 50, 100 years. So
And the one thing I would add to that is, so there's kind of consumer, there's the middle market, and then you can also serve the institution itself. And so I work with a lot of startups who are trying to sell to financial institutions, and founders are often answer the question very naively when institutions ask, what does it take to integrate? And they view it from a pure theoretical implementation standpoint, technology standpoint. Oh, all we need is access to the APIs, right? And we can implement in 3 months, right? The reality of the situation is it is highly complex. When and how are you going to get access to those APIs? And so understanding how your product fits into the larger kind of technology ecosystem and decision-making ecosystem, and then being able to solve your customers' problems around implementation for them by being creative, right? Is super important from a fintech perspective.
So thank you all for answering that question. I guess we can shift to a new one. A lot of you guys actually went over this, but I'll ask it anyway. What's your background before you started the company, and what experiences have prepared you to either found or help founders with their business?
Sure. Great. Yeah, sure thing. So my background, I was actually a student when I started the business. I was 18 and freshman in college around here. I ended up leaving after my first year to do the business full time, and I was just really passionate about derivatives, and I was taking a lot of derivatives classes and building software, and started working on the business with a few folks. Actually, my co-founders, a PhD from Northeastern in mathematics, and we started working on some derivatives algorithms, and ended up withdrawing from school. And that was a tough decision because I was on a good scholarship, and but I knew that I didn't want to go to English class anymore. I hated it, and I'd done enough of that, so I dropped out, and that was a big decision. And since then, learned to establish the business first really through learning to listen to customers, ask what they really want. Don't try and over explain something or really push something too hard at them. You got to really listen to their problems, and end up getting consulting contracts and derivatives, and then starting to grow more established recurring business with large institutions. And with large institutions, I'd say it's really a relationship game. You got to know these people and speak their language, and make them inquire about their own business before you can really start to do serious business with them. And now we're about 7 years in. The past 2 or 3 years, like some of my colleagues on the panel, it took a few years for the business to kind of get going. And some people, again, my background, I'm still in the thick of it, but we've been able to establish ourselves as a good business. So it's something that is, I think, unique for every person that starts a business. And just, I'm curious, as far as those in the room, maybe just by show of hands, who's, considering starting their own business? Okay. I think that's like a solid two-thirds of the, maybe dozen or so folks here. So good. And yeah, thanks. And happy to answer any questions that the audience has as well.
Yeah, who is your main client base? You say you build relationships with other businesses, or do you work directly with individual people?
So we work with businesses. What we do, again, think about indexes like the stock market index. We sell those indexes, so we're licensing data. We also license technology around them to groups like asset managers, pension funds, banks, groups that use them in their process. So the big one for indexes is thinking about an ETF or a mutual fund that tracks the benchmark. Think the S&P 500 fund or the Vanguard fund. They're basically big pools of money that mom and pop or pensions or international investors can put their money into, and it has a mandate to track a benchmark And so any mandates that use derivatives and overlays, whether it be for retail investors or other institutional investors, need more benchmarks for derivatives. And so we work with groups that have been running derivative strategies for a long time, but in order to make better financial products to bring to market for investors, they really want to have a track of benchmark and think about what happened. Everyone used to pick stocks themselves, and all of a sudden the indexes came out, and now all of a sudden you're not going to be the worst performer as far as all the managers out there. You're never going to, basically underperform the benchmark, so to say. If you're a money manager, it's a very politically valuable thing, as well as you kind of know what you're getting as an investor. And so passive investing, benchmark indexes have kind of evolved in equities, but derivatives represent a lot of assets as well that most of them don't have benchmarks that they're tied to. So that's really what we're in the business of. And the interesting part is basically the index providers are able to license their indexes for a fee that's proportional with the assets that track it, because they're licensing their data and IP. Here's what goes in our index. And so that makes it, I'd say, an attractive business model as well. And, one that it's an exciting time to be in. I think the largest merger, one of them last year, was between Market and S&P. And that was, I think, a $44 billion merger transaction. And, it's a highly institutional space. So, we're usually, only dealing with businesses, and, I'd say that kind of understanding the industries in a business that it's just so different than marketing a product to a consumer, like an individual. And, for those of you thinking about starting business, I'd say really think about what business you want to be in. So there's kind of a big difference between the two.
As I mentioned prior, my background was in the asset raising space and hedge funds. But I think to the point of the question, my previous background before that was in athletics. So I think it's a competitive piece of you that needs to be there if you're going to start a business and kind of take that leap. How it prepared me to start a business, candidly, I think these guys will tell you, I don't think anything prepares you to be a founder. It's hard, but it's fun and it's rewarding. And, through my experience, everybody's got a reason to tell you why you should not, right? Financially, if it doesn't work, what's going to happen? You're going to crush, you're small, all of these reasons why people tell you don't go out and take that leap and start a business. And for me, it's like the risk reward of what that ratio looks like. It's like, if this works, it's going to be great. And if it doesn't, what is room look like? It's like not what it used to look like 500 years ago. Don't want your food, screw it up and get eaten, right? It's just like, hey, I'm broken. That's just stuff off. Try again. Go get a job for a few years and try again, right? So that would be my advice to anybody in this room. It's like, start. Don't sit around, wait and wait and wait. It's like, get after it, fail, learn. So that's the best way to go about it. So, I don't know how these guys feel about it, but for me, nothing it's a really unique thing to be out on your own, kind of first day in this kind of thing. There we go. So that's kind of how I do it. I really respect founders and entrepreneurs because of this. I used to look up to guys who played for the Red Sox. Now I look up and really respect founders because I really appreciate the effort and time thought that goes into it.
Yeah, very cool. So my background, I kind of told you guys a little bit about it, but I'll tell you more because maybe it resonates with you. I remember being in college, I wanted to work in two things. I wanted to work in financial services and I wanted to help people. And so my brain is kind of very research, analytical focused. So I'm like, how am I going to figure this out? So I got an internship at asset management, Merrill Lynch. I got an internship at insurance, John Hancock, and I got some work experience at Shamit Bank, which is now Bank of America. And that was good because I learned by the time I was a senior that I didn't want to do any of those things, right? And that any of them were really fulfilling my mission of trying to significantly help people. So I said, but you know what? Research worked. I did a thesis and I kind of found the value of research. I worked at a investment consulting firm called Cambridge Associates. I was in research evaluating venture capital and private equity managers. And looking back on it now, every day I was interviewing kind of the best firms in the world, understanding how and why they made certain decisions. And then there was a big hole for me, which was around product. And I didn't know that I was interested or had a capacity for building product, but ended up doing that at Cambridge Associates and building their first kind of internal software. Moved on, got my MBA, worked at EMC in product, kind of at an internal consulting group, kind of furthered that product side and how corporations make decisions around implementing and launching new products. Worked in VC for a while, but with VC, you're always kind of recommending, and people come to you with a million different questions from a million different areas, and you're supposed to be an expert in all of those things. There's no way anyone can be without kind of 20 years on the job. And so I realized if I'm going to be giving advice to people, I better know what I'm doing and better walk in their shoes. So that's why I basically started a company, which I called my entrepreneurial MBA. And my whole goal was to start and sell the company as quickly as I could to go through that process. And so we launched, and then about a month later, the 2008 financial crisis happened. And so obviously that took a little bit longer, but I was able to sort of turn that business around in 4 years and sell it to now FedEx. And then all of that experience put me in the position of saying, how can I help others through this journey more effectively? And is kind of why I do what I do. And to answer the question about how can you prepare yourself as a founder, in having worked now with lots of founders, there's lots of different personalities and lots of different pathways to success. And there are virtues that are highly valuable at different stages of company and sort of what it takes to get something off the ground, to put it into production, then what it takes to sort of get that to a little bit of kind of penetration and scale, and then to eventually scale that and eventually sort of manage that. Those are very distinct skills. And some people can kind of suffer and make it through. Some people can learn it along the way. Some people can't. And so what is essential is your coachability. And if there's one thing that I found determines how successful someone will be and if they will be successful, it is their ability to learn and work with others, right? And to really listen to good coaches. And that is an essential skill. And that's a skill that you can develop at any age and any time. So go out, find a mentor, find some people, learn how to work with them effectively. The other thing is the profile for me. I've kind of pattern recognition of what statistically is the background of a founder who will have the highest level of success. And that is an engineer who's had some entrepreneurial experience and then can close sales. If you can do those three things, right, you're far better off. And by an entrepreneurial activity, it doesn't matter if that means having a paper route and expanding it, college pro painting, running some kind of web ad service. I mean, anything that you can do that gets you to think about, running a business and making those decisions and thinking about your decisions into the future is going to be incredibly helpful in having you have a foundation of the consequences of your decision making when you're a founder. Engineering is about logical, linear thinking and kind of root cause analysis. And that's where a lot of business people lack that skill. And so kind of their belief, their analytics, all of these things can give them false confidence in certain decisions. Whereas an engineer is much more practical. And that's why this helps. So that's why I think having an engineering-like background is incredibly helpful. So I would recommend do what you can, right, to develop that side of your brain. And then lastly, it's sales, which is communicating with people, speaking their language, all of the things that were talked about earlier. So sell Girl Scout cookies, whatever it is. If you can have some experience before you start, it can be far better.
Couldn't agree more with everyone else what was said. My background again, so not an engineer. I am a quant major though, so mathematics, similar progression, form a hypothesis, we test the algorithm looking for an output. So if you like math, definitely get into it. It's important. Low, no code technology makes it easier than ever to assemble a prototype and get a working prototype in place. So you don't need to be an engineer. That's not your background or passion, but you need to be passionate about the thing you're going to do. That's, at the end of the day, it is gruelingly hard. Grit is the number one thing that I think allows entrepreneurs to survive that and a little bit of mania. So they're like hypomanic. You get like awesome, like, pumped up for the highs, and the lows don't phase you too bad, and you can just kind of keep chasing the high. So that's really important as well in terms of building a business in the fintech space. Make sure you have a background in stats, because so much of what you can do with statistical modeling, statistical regression, just understanding how the data could play into your business model or the technology you're going to build, and understanding the underlying aspects of that data is going to be key. Now, you don't need to be the one that's doing the models, because once again, there's also now technology out there that makes modeling easier than ever before. And then once again, I can agree with more with Vasilios about getting out there and doing something. It's worth doing something if you're passionate about it. It's also worth doing something just for the pure experience. So if you haven't identified your passion and you don't know what it is yet, once again, start something. I started, I think it was like 13 companies before my lighting business took off. I've since started, I have other apps and companies that I've launched since even Botkeeper. When I see problems, I see an opportunity in the market, I capitalize on it, I assemble a team, and I build out the schematic for like the first prototype. I'm always iterating, and I'm learning new things off of the most recent venture because I get to start with a clear slate. And I take those into Botkeeper, and I take things I learned off of Botkeeper and all the other ventures, and I put it into that, and I shortcut a bunch of mistakes along the way. Mentors are also super awesome. I spend most of my time in college going into Boston and networking events and meeting a bunch of other people, Boston and New York. So there's traveling a lot. So get out there, meet people, start something. There's so much more to be learned by starting something yourself from the ground up than getting into like a franchise, a sales job. Like, don't do like a Cutco thing. Like, take an idea you have and say, all right, this is cool. There could be an opportunity in the market, and then run the whole process. Do some light research, do some light surveying, see what it's like to incorporate a business and what the potential corporate structures. There's companies out there like Zen Business and others that make setting up a business very easy, but you go through the process. Get a website up and running, see the headaches and hassles associated with doing that. See what it's like to get marketing and a logo out there. See how like the idea of like, if I put it on Facebook, it's going to come. It never comes. Like, experience the headaches and hurdles along the way from the ground up without anyone else's, call it like umbrella of a brand or business out there. And you'll learn a lot, and you'll probably fail at least the first time. First few, you guys can probably all speak to times you failed as well, but it's a lot of failure, very little success, and you don't do it for the money. The money and the things that the money can buy, none of the entrepreneurs I know are doing it for that. They're doing it because they're like, this thing is like driving them and they're super passionate about it. And that's what wakes them up every day, despite not making money, despite losing money, despite being debt leveraged and, all the things that would say this is the worst bet of your life that you could make. They keep doing it. And most businesses, it's about willing to go the distance that gets you to success, because there's very few, even Slack, who's one of the fastest growing companies out there, I think it was an 8-year journey. So just for perspective, it's usually if like the big, Bill.com in my industry is they've got a $25 billion market cap now. It took them 16 years to get to 65 million. in revenue. It took them 3 years to get to 240. So it's a very long slog, and I tell our team, we are striving to be a 10-year overnight success. So yeah, just do it for the right reasons and start now. Just learn, trial by fire.
Great. So kind of going off of that, so was there ever a point where you were considering quitting on like your current ideas you're working on, or what is the at what point did you decide to move on to like a new idea, a new venture? And for Vasilios in particular, at what point have you recommended someone move on to a new idea or venture? And then we can start over here.
I never do, never would. So I think that it's exactly the point that you're talking about. You've got to do something that you're passionate about, and you're laying it all out there. And so I think the advice is to make sure that that person is looking through their emotions and looking at the right facts and has the right perspective. And that's where the coachability comes in. But there's no one who can tell you whether your business is going to succeed or not. There's no one who knows it, should know better than you do, right? So the best way to have that judgment yourself is to have the experience. And so you can start to have pattern recognition. That's one. And so that's the idea of just get started, right? And then you'll see like, oh, this hurdle, which I don't think I can overcome, is something that I've seen multiple times before. That's fine. Versus also people get stuck to their idea, right? And what I heard earlier from everyone is, I worked in this industry, I knew this problem, I discovered it, it was a pain point to me, and it's something I wanted to solve that nobody else was working on, right? And that is literally the best reason to start something. However, if over time you're seeing that other people don't see the pain point or don't see the solution the way that you do or the degree at which you do, and you're locked into your position and you're not listening to your customers and therefore you're not listening to the market, right? You're not going to be able to move forward. And so there's always this challenge about that line. And so you just have to you have to balance those two things at the same time, listening to your customers and listening to yourself. And that's why it's a personal decision. You can't tell anybody when's the right time.
Right. Yeah, so then I guess starting with Dan, like, has there ever been a point where you considered quitting on your current startup? You got to persevere through it, or how did you deal with some of the challenges as you work through getting your startup off the ground?
Yeah, I think that there are times where there's like a range in which you're kind of questioning, why am I doing this? Am I feeling that like, owning this business is the right decision for me? And it changes over time. And there are times where you're like, and that's usually when the market gives you feedback that, didn't really confirm your view, or new information comes in and you're like, you know what, I should be doing something different. But for the overall business, should I be owning my own business? Should I be owning this business? That's a much more challenging question than picking things. Oh, is this the right business strategy for me? Or am I being stubborn? You kind of need to be stubborn and competitive. Am I being stubborn about the right things? And you want to be stubborn with some things, and you need to question your own decision making. You got to question other people's as well. If you don't question your own, you're surely on the wrong path. You'll just be, ignorant to what's coming in from the outside. But if you're not questioning other people's as well and saying, hey, is that really right? Or if you're not, you need to really have a good ensemble of feedback and listen to the market and go talk to people and ask them provocative questions and, gossip a little bit in the industry to the extent you need to kind of get a color on like, hey, is this going to be a, big deal, or, is this the right track? It's a different type of business strategy, where you're like, am I correct? Should I give up on this thing and do something else? Then, should I keep the business open for operations? And the other one is just such a hard personal question. If you invest years of your life into something and you're like questioning yourself, I think that's really very difficult. I'm not sure, I'm sure everyone on this panel, has asked themselves and considered it more seriously to the negative than other times. But what I found is, looking back, I'd say probably 3 years from where I was at that point personally, where, I was, newly married and, really had financial pressure to make sure I had a good salary and could get, apartments and travel and do these things. That I think was one thing that was, made me really question, hey, if I have to, support 2 people now, it's different. I'm sure if I had kids, it would be to a much, much bigger extent if I was in the same financial position as back then. And, I'd say that's definitely the most challenging thing you can ask yourself as a, business owner. And I'm very happy that I stuck through it. And it basically hardens you in some ways to make hard decisions. Sometimes you need to let go of people. Sometimes you need to say, hey, I know you love that special project you're working on, but it doesn't matter anymore. You need to do this starting tomorrow. Not fun conversations to have. And, but at the end of the day, the question I'm most yes to out of any is, do I want to be doing this? And I'm like, yeah, I'm all in. And, nothing's going to get in my way. But we also have to be aware that there are external things like the global financial crisis, or, the people in Russia that had businesses that they built for 15 years, maybe they were just getting to that great point, boom, taken away from them the next day because it's something that had nothing to do with them. You need to be aware that that's a risk too. And that could be for big businesses, small businesses. And, it's just a risk of it as opposed to, the level of security. I'd say it's, kind of a risk tolerance. And I would say for some people, if they're going out there and, they have a family to feed and they're dead wrong on their business decision and they have opportunities that can get them cash flow and, they'll go start another business in 2 years or do something else. It's probably the right decision for them to, say, all right, I'm gonna cut my losses here and move on, or, do it differently the next time. But I think that having an entrepreneurial drive, I always see myself being an entrepreneur, and I really enjoy it as far as like a lifestyle of, being able to make your own decisions and no one telling you what to do. But you have to listen and incorporate people's feedback. It's good, but I think that it's a valuable thing to be doing, and I enjoy it a lot.
For me, it is has never been about questioning, like, should I be doing this anymore? I have, fortunately, I just have not gotten to that point with our business. Now, that being said, I'm constantly questioning my actions in the business, our team. Do we have the right team? Do we have the right person in this role? Is the team that we have today the right team that we need 12 months from now, looking out 4 months from now? I think inherently, I think everyone here will tell you, being a founder can be a lonely role at times. Inherently, it's that, years. So there's constant questioning, candidly insecurity at times. Am I doing the right thing? Is this the right product that we should be building at this time? Or, there's a myriad of things, but it's never been to the point for me like I need to put this to the side and go do something else. I think that also stems from being very passionate about what I do. When my feet hit the ground every day, I cannot wait to get to work and be around people in our company and build and create and push our product forward. And that really excites me. Hopefully everybody in this room can take that lead, and I advise you to do that. You get to that point, because that's a really special place to be, where people say, hey man, you work all the time, or put a lot of hours in. It's like, yes, however, what looks like work to you feels like play to me, right? Like it's just something that it's the more you do it, the more it invigorates you. It's something that the further you go on in your journeys, hopefully you hit that point and it doesn't go forever, but if you can find that sweet spot, that could be really important. It's to be in your life. I know I'm coming back to this, but I advise you to take that with you. Yeah.
So I'll add one more thing. There was a survey done a little while ago to figure out kind of what age and experience and all that will lead to the most successful startups. And it was basically, you're 42 years old, you have a startup, and you've done 1 or 1.2 pivots. And when I read that, that made total sense to me, because at that point, you're senior enough that you've got contacts in the industry and you really know the problem. So you're not going to jump into something before you actually know what you're solving. And one pivot is important because what it's signaling is that you've learned something along the way and you're adapting your original thesis to the market, right? Because if you're not adapting, it means you're not learning. But if you have multiple pivots, like three or four pivots, then your chance of success is highly reduced, right? Because you're just hopping too quickly, making decisions too quickly. But anecdotally for myself, and I haven't done the analysis, but just knowing our startups who do succeed, there's the opposite profile, which is the people who are 1 or 2 years, maybe 3 out of school. And those folks are like sponges and they're highly flexible. So if they get on the right pathway with the right people around them, they just absorb and they listen to the market, right? And they'll solve the market's problem. They're caring about success rather than their own overweighting their own point of view. People in the middle with that kind of 5 to 15 years experience can be overly confident in their assumptions of things and listen to the market less. So I think that's a good data set.
Yeah, it inherently doesn't feel as though the market will tell you.
It will tell you.
It will tell
Yeah.
you. Right, it's feedback there.
Yeah.
There's market feedback there,
Yeah, I mean, the point of no return is when there is no point thereafter. It's like related to sports. So I played sports competitively through college, and I know a lot of entrepreneurs who have too, because you need to have that grit and that keep going. You only stop fighting in the game when the clocks run out, when it's over. And so with business, it's very much the same, but the clock in business is money and time and people. Some combination of those three. You don't have a team, you can't play the game. So you lose your team, that could be the end of the game. If you run out of money, that could be the end of it, unless somehow you can kind of keep limping along just long enough, which is the third one, time. So oftentimes it takes more time than you ever thought to get the traction that you need to get the product. I run on a 2-2-2 rule. So assume anything you launch is going to take twice the time to build it. It's going to take twice as much money to get it done. And it's going to take 2 iterations. If you run on that methodology, I found that as long as you plan that into your next, you're a lot closer to what you think it's going to be than blindly missing by quite a bit. The other thing, kind of building off of Vasilios, I used a little bit different wording. I have strong opinions held weakly. So I will fight tooth and nail for my opinion, but very quickly, if someone says the right thing, proves the right data points, opens my eyes to, I will totally pivot and turn and go in that direction. I also believe in, from a pivot standpoint, you can do a lot more iterations before a whole pivot, right? So like there's drastic pivots where the business looks very different. Too many of those, to the point, it usually leads to failure. But lots of iterations. So I've even iterated like 180 degrees, which I guess that would be, call it your first pivot. But it's a lot of little things because you're learning from market data points along the way. You're kind of guiding the ship. It's like guiding a ship in a storm. You're going to be trying to tack, left and right, whatever is going to be the right way that gets you through the fastest. That's the path of being an entrepreneur. So no one can tell you when your business is not going to work. I can't tell you how many times people told me Botkeeper wasn't going to work. 400 something employees later, 90 million. I'd say it's pretty damn working. Signing up for a guy. People still tell me it's ugly, and that's fine. People tell me there are problems and challenges that we could improve and fix. Key is listening, not taking anything personal. I conduct a ton of calls with our clients, asking them to give me the criticism. I don't want a pat on the back, great, for my ego. I don't really have an ego. I just want to make this product as good as it can be to accomplish the mission of revolutionizing the accounting industry. You need to make whatever business you start your hobby. If you're doing it for any reason other than passionate about it, like I'm doing this so that I can vacation or travel the world. You're in the wrong business. You should be in the travel business. You need to be doing the thing that you're doing for such a point where if you had time, this is all you'd be doing. And there's nothing else you can imagine doing. And most entrepreneurs I know, when they lose that thing that they were doing and successful outcomes, they go through states of depression because they lost the thing that they were so passionate about, and they lost a big piece of their identity. So just make sure you are all in on the thing that you're doing, and every day you put your feet on the ground and you're excited to do it. So what is it? Love what you do, you never work a day anymore.
Yeah, and it's not about the money. If it's about the money for you, that's not the right piece for you, because that is a forever.
Well, yeah, I don't like when, largely, philosophically, pretty much I'm in line with everything that everyone's saying here, but when you're broke, it's totally about the money for you, right?
Well,
So-
there's a wide chasm there between being broke and getting up every day.
But I also say there's no other path where you can make as much money. You can't go work at some company and, become a multi-hundred millionaire. It just doesn't happen, with salaries and, you're doing it to create wealth.
Well, that's
You have an equal probability of winning the lottery though. So if under that premise, you might as well just go buy a lottery ticket every day. And you could make more money winning the lottery than you could starting a business. There's a higher fail rate in business than with most lotteries.
I don't buy that.
When I say not about the money, what I'm saying is you're not getting up every day to try to, go from being worth, $50 million to $51 million or whatever. An entrepreneur who's is having success and is trying to, push it further. Obviously, if you're, in a situation where you can't put food on your table, yes, of course, it's about money. Maybe at that point, consider other avenues. What I mean is, if you are not passionate about what you're doing, the money it's an unfulfilling end game that is a constant trying to want this and then you want that and then you buy this and you want more. That's not.
And you won't be able to recruit a team.
And you won't be able to recruit a team. Exactly.
I think that it's what you want to do with it. And that's whether it's about the money for the business, if you're raising lots of money versus if you want lots of money, personally, when you exit or monetize the business.
Sure.
I think it's an important part of the decision making that motivates, at least me personally, to be in, starting a business in the first place. And I think that what you want to do with it, having money, just have money. I don't think anyone wants to. I think that it does allow you to basically have certain freedoms in life. If you are able to create wealth, that is a totally motivating factor. But it's also, the business, I think, to be successful, it needs to be your passion, like you said. And if you're going to be raising money, you need to have a vision of where that money is going to get invested to grow the business and take it to the next stage. And that's why people raise money, to put it to work. And, so it's a saying that, it's personally motivating, not about the money, 100%. You need to have your business as your passion, live and breathe it every day. Money is the lifeblood of the business in itself, as far as what decisions are available to you to invest in the growth of the business.
Yeah, I just to add one more thing. I think most people, once they have kind of the core necessities that they need, which is for everybody it's different, but for most people it's like, hey, I have a nice condo or a nice house, my dad has a nice car, I've got a couple of toys that I want, whatever. Everything past that, if it's strictly fiscal drive, like when you really pushing for, it's going to be hard to stay engaged. And so I think that's where I'm going with that. I mean, yes, we all need the necessities. Once those needs are met, I think the incremental, satisfaction and happiness that comes from what comes on top of that is really small. And so if you don't really have like a burning drive, like a love or whatever it is, for me, it's building a product, geeking out on product. For some people, it's engineering and creating models or whatever it is. And I think you're gonna find yourself in a empty spot. So be cognizant of that.
It's easier to fill those necessities and meet that demand a million other ways than starting a business. And frankly, if you're passionate about anything, whether it's a job that you have, you can rise up and have phenomenal success there because you're giving it your all, you're taking it to the next level. Business, I just find that like it's got to be, you got to think of it as a hobby. You're obsessed about it, you love it, it's what you do when you're not working. That's a great business to start.
thank you guys. So, what is your best advice for students looking to either build a fintech startup or build a career within the fintech industry? What would you say is your best advice for someone trying to really get into it?
Can I take that one first? I'd like to ask the audience what advice would be most valuable to hear from the panel.
Yeah, I'm interested in what potential investors want to see from, someone developing the product. What are you guys looking for?
So wrong question. It's a question everyone asks. It's the questions that dictates everyone's lives, right? To the point earlier, money is part of the lifeblood of a company and you can't survive without it. But people put the question of capital funding, right, an investor ahead of the question of the business in the market and the product, right? And there is a time and place when you do need to focus on, what investors think and how, but that's not the first question, right? So investors will fund companies that they have established some traction for, investors need validation, right? So you can be on your third successful startup, well, they're going to back you, right? But if you're not, everyone here, and you're starting off, investors are probably seeing lots of companies that are very similar to yours. And so you have to distinguish why your particular company is better than the rest. And so you need to show some market data, some market traction around that. And so therefore, if you're asking, what are the investors going to think, you're putting the cart before the horse, right? Because your first and only thing is to get customers to sign up, stay with your product, and spend on your product, right? And if you can do those, then an investor will have the confidence that they need to be able to make a decision. And so we can talk about the investor thing, but I just wanted to preface it with that first. And it's pretty simple advice, right? I have to say it perpetually to my startup founders, and it's got a half-life of about 4 hours. So because after a day or two, the realities of life come in where you have to provide for your family, you have to provide for yourself, pay your student loans, etc. And one thinks that to build a business to hit the goals, right? Everyone's goal oriented. So I've got to do $1 million in revenue. Well, I have $2 million in revenue. I've got to hire sales reps. I've got to do all of these things, and I need funding to do that. So the only thing that's holding me back from achieving this level of success and then getting the money is money in the first place, right? But that's not the truth, right? You have to really focus on value maniacally, right? And if you're delivering value, then people will back you.
You can do that with not a lot of money.
Yeah.
You can prove it very quickly.
Yeah. And that's where the engineering comes in, because I was just on the phone with somebody yesterday kind of explaining this. They wanted to hire, they don't have development skills, so they're going to hire people. And they're like, how much money do I need to build this full product? Well, you don't need to build a full product. All you really need to do is build the most single essential feature within that product to be able to show a potential, in this case, an enterprise customer, to show an enterprise customer what it is, right? To make your vision a reality and see if they're on board and behind your vision. And then you can expand from there. And if you get engagement at that point, then hopefully you can continue to build in this very small fashion, get just the amount of funding that you need, and then eventually raise larger amounts of capital. But you go to market, you raise money, you spend all that money, and you struck out when you only have one strike available, then you're done.
What I remind people all the time too is that the venture, so I have a small VC fund on the side too. So I look at a bunch of these deals, and I can tell the founders that I'm going to back from the founders not very quickly. There's those people that, to Vasilios' point, money is the problem as to why they don't have the traction, they don't have the market adoption. And then those are people that find the money in non-conventional means. So anyone who's ever told you quit your job during the day or quit moonlighting or whatever and just go all in on your venture, crap. You should be having side hustles or gigs or waiting tables or doing something for as long as you humanly possibly can, because you're going to take all the money you make from that plus your time and hire other people to assist filling the gaps that you don't have, using the money you made from that to be able to get the product to that point. So if you're not a technical founder, hence being an engineer is the easiest path. You can build your own prototype, great. But once again, there's Bubble and there's other, the non low code or no code tools out there. But I used to, like with my lighting company, I landscaped because I knew I could make 50 to 100 bucks an hour, and I could hire someone for 4 to 10 hours with that 50 to 100 bucks. So I could get that many multiples on the hour that I put in, hiring people to fill the gaps with the aspects of the business I couldn't do. So I did that for as long as humanly possible to get the prototype, to get the traction, to then go to a VC and say, this is a much more surefire bet. When you do that, you put your own money into it. They also like that, so that you put skin in the game. It also means at the end of the day, you keep the money in your company. So I control my board. I have half the board seats on my board. I have the largest shareholder in the company, still by a long shot, because I got the business to a certain level of traction and viability before we went out and raised the round.
That is huge. Huge.
We did our C round and I still have half the board seats.
That is the that's the wisdom from someone who's been here before. And so you just said earlier, it takes 5 years probably before you know whether you really got something, and it takes 7 to 10 years before that company will exit. And so that's a big chunk of your life. And would you rather come out with a 2 or 3x, and because you can preserve that extra capital, that extra equity, because you were able to skip around of capital, makes all the difference at the end of the day.
And if you guys do get to the point where you're going out and raising, because like I'd say for anyone that's going to go start a business now, you are 2 or 3 steps before raising. You're going to put your own money in, put some of your own credit in, get some funding from friends, family, and fools, and then go out and do the round. I published a video out there called How I Raised It. And if you just look up Enrico, How I Raised It, I walk through the actual raise process in super detail, like everything you should do before you talk to an investor, and then how you run the process.
I would say, if anybody here is not an engineer, do not let that burden you. That being said, if you're not an engineer, then you need to be a proper person in that person where you conceptualize concepts, products, great UI or UX person, create products that delight people, who might not know exactly how to write that code. Find that, but you need to have that skill, or you need to be technical and be able to write that code. So you will find yourself great product. It's technical, right? You don't have to be both, but in my view, you've got to be at least one of those to really, really have a good shot. To just say, oh, I've got an idea of XYZ. I don't really know how to like iterate on it or build it. I don't really have much ideas of it. That just sounds like a cool idea, and I'm also not technical. It's like that's a tough thing, I think, for not only start a business but also get to that point to go out and raise capital. I think that's a much tougher.
Yeah, I think it's a good question, and I think that it depends on the kind of investor. If you're going to like professor, friends and family, you just need like 20K. You're gonna put maybe 5K your own money, and you know your budget's very clear, etc. It's kind of different. You want to try your first thing out. This isn't the going to be your life for the next 10 years. You just trying to start out. I would say that you know that they have the expectation that if it doesn't go well, they could lose all their money. And again, this is like kind of like day one, you just need some startup capital. But the most important thing that they want to know at that stage is that you're going to listen to them. And it's not what they want to hear. You got to ask them to an extent. You got to have your own vision and everything, but they want to be assured that if there's a hard situation, that you're going to tell them proactively about it, that you're going to solicit feedback from them. And I've taken a different path than Enrico, in that I haven't had multiple businesses before. You know, a lot of the best feedback I got were from some of my early investors, advisors, partners. You know, I brought on a lot of people to help support me, back me. And, you know, I think I've listened to them relatively well, and I have a good group of partners that I know are long-term people that have my back. And it's, I'd say, you know, different from my dilution standpoint, you know, but I would say that as far as being able to access capital in the future, knowing that you have great connections to clients, especially if you raise from people in the financial industry, they opened up doors to most of our clients. But the most important thing is that they know you're going to listen to them. You know, everyone here, if they were doing it, would be doing it for their first time. And, you know, it's a totally different ballgame than if you've already started the business and you're going to go. And it's, you know, at that point, I'd say more like a game. If you need mentorship, not everyone is like Enrico and can start 10 businesses. You know, maybe you do 2, and then you're like, all right, I'm good. You know, not most people have the guts and the drive. But what I would say is everyone's different. Some people are like, you know, hard charging. It's extremely hustler, you know, but everyone has a different personality and profile. And I think that some people, you know, if you surround yourself with good mentors that back you and you have good trust and relationship, that can be valuable as well, as a different path, depending on what kind of person you are. And, you know, that's more the avenue that I went. But listening is the most important thing, making sure that you don't keep things from them. You know, but ultimately what they want is to have a good return on their investment. And, you know, if that takes them saying, hey, I'm going to criticize your business like this, you got to be all ears to it. And you got to say, you know, hey, that's actually a great idea. Leave the ego behind. And, you know, there are other times where you're saying, hey, I'm getting conflicting advice, or hey, I actually don't believe you. I gotta go with my gut here. But I listen to you. They'll understand. So, you know, as far as investor relations, it's been definitely an important part of my journey, and I'm lucky to have good trusting investors. But yeah, go ask them what they want, you know, and if you're talking to VC investors versus individuals, it's very different. If you're talking to VC investors, ask them, what industries do you think are most interesting? What are the big problems there? You don't want to go in and say, hey, I'm going to build this thing for 2 years. I'm going to bust it out. I got my sales finally. And then they're like, oh yeah, like we actually don't think that there's a good opportunity in that space in the first place. If you're talking to, you know, those VC type investors, you know, they have a thesis. They know what they want in many cases already. Don't waste your time building something that's not, in their view, going to scale, because they've analyzed these markets and industries very well themselves. So if you have access to people in the venture capital industry, they love to talk, and just go ask them about the industries and what they think are good opportunities, and they'll tell you about it. So that's what I would say to help confirm your thesis as well, because you're selling to them when you go raise money.
Just in talking about investing in fintech, you know, one of the big things to think about is strategic capital. And so that means basically getting money from your customers. And I think it's a wonderful thing, because it ties your success to your customers. And so you now have 2 parties who are even more vested in you succeeding. And also the terms are better than if you go to a financial investor as well. But that kind of early input and is extremely valuable. And also, if you're trying to raise capital early, investors want to see validation. They're going to want to show that a customer signed up. But your customer, if they're investing before it's even gone into production, they know the answer there, because they literally know whether they're going to buy your product or not. So they're basically having inside information into that round. And so we've helped a number of companies do that, either by a sole strategic investor or consortium with strategic investors. And it's been super important, because it's really effectively helped them skip around capital and get twice as much equity.
Bootstrap. Does everybody in here know what that is? It's the way. You can do it. You can find a way to get started. No code, low code, get up, get going, get some customers. Worst thing you can do in my opinion is to just go out and just start diluting the business. Get to a point, some product market fit, some capacity. It's not as expensive.
I know there was another question. You had a question?
Yeah, I just wanted to know, that will it be sensible to make your own money, while you were starting up? And the second was, how to keep differentiating your product moving on? Because I know Botkeeper is, if you're counting it, there are many other accounting products for that matter. It's one, two, so there are other firms as well, so how to keep differentiating your product. It's not like you're choosing to see other products and you know what other people are doing different.
100% yes on your money. Because if you're not willing to put your own money into it, then what is this idea really worth? Right? So, and VC, anyone that's going to put money into it is going to look for that too. Even my most recent round, like investor, one of the questions they asked before we shook hands and they wrote the big check was how much of your own money do you put in? Like, what is that of your personal net worth? I got into it and I loved it. I think it was great. I think it's awesome when people actually speak their mind and they ask those one questions. But yes, put your own money into it. Then every decision becomes that much more critical. It's that much more important that you get it right. It's also that you're going to think through it differently than you would if you were. It's like playing poker. You're playing with fake money and chips, or playing Monopoly with fake money. You make decisions differently. There's real money on the line. The decisions are totally different. That's with business. And then if like differentiation, I don't know how the other guys have done it. We at Botkeeper, we're the market maker, then the market leader. We've maintained that position, so we haven't had others follow. I assume one day we will. But we just basically, it's a very tough problem to solve what we did. It took a lot of time, a lot of money. I think the right strategy. Other people had gone down very different journeys than we did, and we kind of stayed true to the course, iterated as necessary along the way. But we've been differentiated by being the only market maker is a great position to be. It's also very tough. Getting off the ground is very difficult. Getting any traction is very difficult because selling a better mousetrap, everyone knows mousetrap. Sell something entirely different. It takes a little while for people to understand what that is, how it fits into their life or business. The upside is once you do start to create the market, you can own that market, and then you become a big player in the market. Can you define the terminology? Like we coined bot keeping. It's not a thing. But it's what people ask now, like, oh, do you do bot keeping? And when you Google bot keeping, my company comes up, just like inbound search, HubSpot comes up. That was not a real term, but HubSpot coined it. So yeah.
I'm gonna start doing more of that.
Yeah.
Make the terminology, I like that.
Yeah, one of our companies who does digital onboarding call themselves digital onboarding. And so now, anytime that you use that phrase, it's literally is the top SEO as the company. So what I would say, about putting your money in is in the very beginning, you have to put your own money in because it's just so high risk and you've got to make some progress. You have to know what's real before you ask other people to invest their money in it. I would say, but there is a balance point in that, and not to overstretch yourself, not to put yourself into financial jeopardy for your company. You should be making enough progress. The whole idea is that you put in a little bit to show progress to get others to invest. Because when things go south, as they inevitably will, that economic hardship creates a lot of strain that we were talking about earlier on the entrepreneur. And then, I think that there's concentration risk there. You're not getting salary, it's your life, it's your dreams, now you're in debt. And so that can start to pile up a lot on it. So I think you have to find a healthy balance there. And then how do you continue to evolve? in the beginning, you can have a lot of people have surface conversations with you, but you don't really know what's for real until you've sold your product to somebody and they're using it or not using it. And once you're in market, there is no information like that live, real information. And there's no more valuable conversations than the one you're having with your customers. And so that gives you the platform to be able to have the conversations to get smart. And eventually, you should be far smarter, just after launch. You should be far smarter about your customer's problem than they are, because you're studying this discrete problem across multiple different customers. And so that's a purview that even your customer doesn't have. And so now you can anticipate their needs, and you can, whether it's a feature or rolling out or whatnot. And that is a continuous process for the life of your company that you need to do if you want to thrive.
Well, yeah, I'd say definitely put your own money in. I'd say you pivot your product, when it makes sense to from a business standpoint, and got to go listen to those customers. Our journey was starting with something extremely specific. So, exotic options optimization software. 500 people in the world or so do exotic options, and it was so specialized. The optimization for it, there were maybe 20 people out there doing, that, and mostly banks and most of these like French mathematicians, and it was just highly, highly niche. We got really, really specialized at it. We realized the market opportunity wasn't as big as in regular listed vanilla call and put options, and we simplified our software and we started branching off, building more and more things. And from listening to our customers and doing consulting, a lot of the times when you build a new product, you want to ask, hey, is this just going to help this one person for the next 3 months when we have our contract, or can I go sell this to 100 other people? And that's a really important, and why is it valuable? Does it help them go sell their product or service? There's the revenue side of the equation. You want to be on the revenue side of your customer's equation rather than your customer's cost side. You're just helping them save a few bucks, and on something, it can be a high value prop. If it's a huge cost, if it's a huge factor, totally impacts their profitability. But if you help them go sell, it just motivates a lot more people within your customers to take more risk, financial risk, and get more excited about it because it helps enable them to grow. And you can help frame your product to make your customer more money and sell. Quantifying the financial value is really high. And other value props, hey, it saves them a ton of time. I mean, those are all great value props as well. You just got to think about what it is, why they're doing it. Is it easy to make new things and show them new features, or is it difficult? Does it pay to keep it simple, or does it pay to make it flexible? Those are different considerations that I think, depending on the business and the users. But ultimately, you want to be going after a large market opportunity. And we ended up finding ours, basically through listening to customers, evolving the thing, going from complex and specialized to, the best example of this in any business, I would say, is Amazon starting with books, right? So they got really, really good at books. Now look at them.
They did well.
They did well, right? And books and other things. So, right.
So I think we've run out of time. We're going to quickly go over our upcoming events, and if anyone wants like 1v1 questions with some panelists, would you guys be interested in?
Yeah, sure.
Yeah, thanks for having us.
Great, thank you guys very much for coming. We really appreciate it.